Welcome to our RAA webinar today. My name is John Green with AMBA, and we're talking about all things Life Insurance 101, for lack of a better term. We've got a lot of things we want to cover in a short time period, but let me do a couple of quick housekeeping details before we get started. You'll notice that all participants are in a listen-only mode. And while that means we can't see you or can't hear from you, it doesn't mean we don't want to hear from you. If you've got questions, feel free to drop those into Q&A. We'll respond back to you or answer those questions a little bit later. We record all of these sessions. We'll make them available on the RAA website here in the very near future, probably a week to 10 days, that you can go back and reference to this, share it with a spouse, maybe someone in one of your chapters across the country as well. So thank you for joining us today. I want to also introduce our co-hosts and panelists today. The first, this is her brainchild. This is Jess Boudris, and she's class of '01, MS of '04, and she's on the RAA board. And she said, you know what, we need to have some more education opportunities for our members. And this is her brainchild, so I'm excited to bring this to you as well. Sarah Tarosi is our Alumni Engagement Officer at RPI, and she will be sharing with some of her thoughts today as well, and then joined by Amber Blumey, who is our AMBA Association Relations Team member that works with alumni groups. So Amber and I both work with AMBA, and we are an organization that brings benefits to associations all across the country in all different formats, including alumni associations as well. So we're proud to be here with you today. I have been in the industry about 35 years. I've spent most of my time working with educators, helping them understand what their benefits are as an active educator and in their retirement years as well. So the opportunity to be with you today is greatly appreciated. And thank you for joining us today. Real briefly, we're going to talk about what is life insurance at a basic level, what you can do with it. We're going to explore the three main types of insurance, of life insurance, and show you maybe who needs it at what different ages. Many of us, depending upon our stage in life, life insurance means different things at different times. And we're going to walk through a little bit about some of the living benefits that life insurance may have for you. But more importantly, we're going to look at it from the standpoint of if you have life insurance as an employee of a company, what happens if you pass away when you're still employed? How does all that work depending upon your age, and what happens if you leave your place of employment to that life insurance policy? So some things you need to look out for. So again, as we roll through here, I know some of our panelists and co-hosts may have some questions as well. We want to keep those coming in overall. And the reason we do this, Amber and I, too often, we hear from alumni members across the country, from educators across the country that we work for, I wish I would have known something sooner, or I had to work longer than I expected because something happened. And this really comes into play when it comes to life insurance, because most of the time you go to work for an employer, they have a life insurance policy, you check a box on an enrollment, and then nothing ever happens. You don't know anything about it. Something happens at home, or something happens with a family member or somebody that you work with. It's like, oh, I wish I would have known. That's what we want to try to avoid as part of this educational conversation today. And thank you, Jess, for bringing this topic up, because we do think it is a very important topic for many to understand. At its base level, life insurance is simply a contract. Life insurance is some of the oldest insurance that's been around for centuries. It's a contract between a company and a policy owner in which someone, the company, the insurer, guarantees to pay a sum of money to a named beneficiary when an insured person dies, in exchange for premiums that are paid throughout a policy period or a lifetime, depending on the policy. It's a very simple contract, but it has so many different nuances depending upon the type of insurance that you have, whether you're renting it from an employer, whether you own some outside of work as well. And there are three main categories of life insurance, and there are so many different variations and shades off of this, but I want to hit on three main ones. The first is term insurance. It's the least expensive. It is for a period of time, a fixed period of time. So think a term, a 5-year, a 10-year term, a fixed period of time for a fixed premium. For most employees that have a life insurance policy through their employer, it is a term policy, which means that as long as you're employed, you have this amount of coverage. Once you leave employment, that coverage stops. Or once you reach a certain age, that coverage may start to decrease. And that's very important to understand, because more and more people are working longer for their place of employment, and what they thought they had may change the older they get. The one thing that you want to check with any term policy, whether you have it as an employee or have you separate term policy outside of employment, is does it have a conversion privilege? Meaning, do you have the ability to convert it to a whole life policy or a universal life policy at any time or after you leave your place of employment, something like that, or at the end of the term? Those are very important things to talk about. And we'll touch on some more questions that you need to ask yourself and your HR department later as well. The other type of life insurance, and one that has been around for as long as life insurance has been around, is called whole life insurance. And whole life insurance typically is not offered at your place of employment, but many individuals may purchase it outside of their place of employment. Typically, it has the highest premium. It is a fixed premium, meaning it's going to stay that amount, but it lasts your whole life or to age 100 or 120, depending upon your age. And as a result, it builds cash value up inside of it. It is usually designed for that person that says, I know I'm going to need life insurance sometime in my life, but I want to pay a fixed premium and never worry about it in the future. So it's not as common as it used to be because it does get quite expensive depending upon when you take that policy out. And as a result, universal life has kind of become a hybrid between the two. It gives you this permanent protection, but with a lower premium, depending upon your age and what you take out the policy. But because of that flexible premium face amount, you may end up paying a lower amount when you're younger, but face higher premium increases when you get older. So universal life can be a really neat product for the right person, but it's something that you really need to specialize, or not say specialize, have a specialist look at for you as well. So usually your company will not offer a whole life or a universal product. They'll offer a term product, or they'll guarantee you for X number of thousands of dollars of life insurance. And so we'll talk about that as we roll through this conversation here as well, because life insurance has a wide variety of things that it can do for you. At its base level, it can replace lost income, Social Security, or a pension that you may be relying on someone to provide for you. It can pay off debts, mortgages, student loans, because most people don't realize student loans are not dischargeable by bankruptcy or by death. And so life insurance can be used to pay that off as well. Credit cards, car loans, long-term care expenses for individuals. Maybe you're taking care of a parent that needs long-term care and you have to place them in a nursing home. Life insurance could pay off to pay that debt or pay that expense back that you were having to pay for their care as well. It can also just pay final expenses such as burial and cremation costs, allow you to leave a legacy back to your college or back to your alumni association or to a church or a charity, something like that. Really a neat way to do that. Or some people will use life insurance to pay for grandkids' college. So lots of ways you can leave a legacy overall. But at bottom line, life insurance in whatever form you choose it gives you peace of mind knowing that your family and those people who depend upon your income are protected. And that if you leave the earth earlier than expected, or if you have a whole life policy whenever you do leave the earth, that there's money left over that can be used for a lot of different methods out there. And depending upon where you are in your stage of life, there are different reasons why life insurance is important to you. If you're married or a partnered couple, oftentimes the loss of that second income may put difficulty on making ends meet. If you then throw kids in the mix, that makes it even more challenging, not only because you've got other mouths to feed, but if somebody is a primary caregiver to that child and the income winner passes away or the child care provider passes away in the family, that's an extra financial burden that you have to replace that role. Same for single parents, makes it even more difficult. As I mentioned, stay-at-home parents. A lot of times stay-at-home parents don't realize the value they provide in the family, and the cost to replace that can be quite costly. I experienced this with my brother-in-law. When his wife passed away, his first wife passed away, he had to go through a wide variety of care providers and cost him a significant amount of money because he did not have life insurance on his wife. And it cost significant money out of his pocket, as well as time and effort and things like that. So don't undervalue a spouse who stays at home with children. It's a significant role, and it does cost to replace that role. Empty nesters. A lot of times we see families that say, hey, my kids are out, they're out of college, I have no more big expenses for them. Do I really need life insurance? Sometimes you adapt a lifestyle, RVs, boats, timeshares, things like that, that may be difficult paying off if you lost that second income. And then from a retiree perspective, with estate tax costs being in there, as well as maybe the desire to leave tax-free money to a family member, things like that, life insurance can play a role. So no matter where you are in age and stage in your life, life insurance could be something that plays a role in your overall financial planning. But since many on this call are probably already or still remain employed and not retired, I want you to think about some questions. What happens if I die while I'm still employed? Does your company provide any form of life insurance? Meaning that as part of your annual benefit package, do they have a life insurance policy? What size is it? Would that go directly to your family? Or if there is there any type of accidental death policy in your company that if you were to die at work as a result of an accident or something like that, or while you're on a trip, is there any certain payouts, things like that as well? What happens to your 401k or your cash balance pension plan if you pass away? All of these things should go into your calculus of how is my family or my beneficiaries going to be taken care of? What's going to happen to your unused PTO? Do some companies allow you to take that money, the unused PTO, and use it for your beneficiaries, things like that? You really want to dig into your company benefits and don't just check a box every year in an open enrollment and say, I want to keep what I had last year. Your life changes, things change in your life. I was looking at the life insurance that my company provides, and not that I'm anywhere near there yet, but I noticed that at a certain age, it dropped by 50%. And so you need to think about that. And so it's important to understand what your HR benefits are. But one thing I want to press upon you today, please, please, please check your beneficiaries. Check your beneficiaries on your company provided life insurance, as well as any type of retirement savings plan, whether it be a 401k, a Roth IRA, or some type of cash balance pension plan or a pension plan. Too many times, Amber and I have dealt with surviving spouses and they are expecting a life insurance payment. And we come to find out that the former spouse is on that policy. And we're making a check, a pretty sizable payment to a former spouse. That's a real uncomfortable conversation. I've sat around tables with three children that are grieving the loss of their father. And I have checks for two of those children because that third child that came along a little bit later in life didn't get added onto the beneficiary paperwork. So please, 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 if you take nothing away from this conversation, check your beneficiaries with your HR department. Every year they're going to have you do that anyway, but please do it throughout the year. Just make sure it's to the right person at the right time. And then when you leave, what happens to your life insurance? Whether you retire, whether you leave your job to go to another place, can you take that policy with you or does it just go away? And if so, does it change? Many companies allow you to take your life insurance with you. It could be part of a retirement package. It could be a policy that you take with you and start to pay on yourself. But as you get older, that face amount automatically reduces. And so something you may have thinking, well, I've got $50,000 of life insurance. Once you reach age 65 or 70 or something, it can start to drop and it may not be the amount that you need or that you think you need whenever you need it the most. The other thing to think about, because when you came in as an employee, you usually have no qualifications for your life insurance, meaning that you just have to sign up for it, check a box, or the company provides it for you regardless of your health conditions. And if you left your place of employment and still needed life insurance, could you qualify medically for life insurance somewhere else? So again, those are things you need to think about while you're still an active employee to make sure that there are no surprises or that you don't have to work longer than you expected because you can't qualify for a benefit or something like that later on in life due to health conditions. And again, check those beneficiaries. Please, 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 if you hear nothing, check your beneficiaries as well, especially when it comes to if you do have some form of a retirement plan, some type of cash benefit pension plan or a pension plan, which many larger employees offer. Some of those ways that you take your retirement benefits from your employer may change based on how you set to receive them. And so that means they could go totally away or they could reduce by a certain amount for your beneficiary. Again, it pays to understand what those benefits are as you leave the company or retire. One thing I want a lot of folks to think about because they say, well, I don't need life insurance anymore. I've paid off my house. Maybe the kids are out of college. Do I need this policy that I've had purchased many years ago from outside of my company, that type of thing? You may have some living benefits inside of your policy that you're not familiar with. And I want to make you aware of those. One is a terminal illness rider. This is usually not part of your company paid life insurance. It would be something that you purchased outside of your company. Usually it's a free benefit that's on your life insurance policy, meaning you don't have to pay anything for it, don't have to qualify for it. But it's basically triggers that says if you have a life expectancy of less than 2 years, you can take a certain amount or a percentage of your face amount of your life insurance policy to use for your care, your treatment, take a bucket list trip, whatever you want to. But your face amount of your life insurance policy is reduced by that amount when you pass away. This is a really nice benefit that if you need the extra money to pay for your care or cancer treatments or something like that, you have some of those benefits available to you as well. Probably the past 10 years or so, a nursing home rider has been also added to many policies that are owned outside of company paid life insurance. This is another benefit that works just like the terminal illness rider. It's usually free. It's a specifically defined amount or percentage of your policy that basically says if you can't perform two of the five activities of daily living, bathing yourself, going to the restroom, transferring yourself, feeding yourself, or dressing yourself, if you can't provide two of those by yourself, this nursing home rider will kick in and pay for 50% or up to $100,000 of your policy for yourself. But usually it will define it and say you have to be cared for in a nursing home. You can't just be cared for at home. So again, this is a really neat rider. It's free on most policies. Again, make sure that you check that out because even if you don't need it anymore, like my wife and I, our kids, thank the Lord, are out of the house. They're on their own. They have their own jobs. They're not dependent upon our income. We may want to keep our life insurance policies because of this nursing home rider. This is a benefit that we could take advantage of if necessary. And then you want to look at non-forfeiture clauses in your policies. This is usually for your whole life insurance or your universal life policy that says if you stop paying your premiums and you don't think you need it anymore, it will allow you to have a certain period or a certain time worth of coverage that you would keep your policy going for X number of months or years or something like that. So it still allows you to have some life insurance even after you stop paying on it. So all of these are good ideas to check out. Make sure you do a policy review. I encourage you to go check with your HR department. We'll talk about that in just a moment. Or if you have some life insurance through an outside company, review that policy and understand if you have any one of these living benefits on there because it could make a difference in whether you decide if you need it later on in life. Now, these are some questions as we start to wrap up that I want you to ask yourself. First of all, see if you have life insurance because there's so many needs depending upon your age and your stage. Do I have a need? Do I have life insurance? Check with your HR department. But you're going to ask, would someone depend on my income if I pass away? Depending upon their age, depending upon their financial situation. And, what happens to my pension or my retirement savings when I pass away? Is that going to change for my company? Do I have any outstanding debts? Meaning, is somebody going to be looking for payment on a mortgage, a student loan, something like that? Do I need to pay that off? And does my life insurance have any living benefits that can help me in case something happens to me while I'm still alive? Can I use my life insurance to pay for kids or grandkids' college if necessary? Or do I need to leave a legacy, whether it's to a church or the school, the alumni association? Who's going to help me with these questions? That's the good news is you have an HR department usually that can help you with those questions. Oftentimes it may be a company outside of that can answer that. Or if you purchased life insurance through a life insurance salesman or a financial advisor, ask those questions. Just take this and say, hey, here are all these questions I have. Ask that. That's what they are there for and that responsibility. You can also besides starting with your human resources department, you can check out the RAA alumni plans. There are many different life insurance plans that could be available for you out there. You can go out and check out raa.alumniplans.com and see what's available to you as well. So now's a good time for questions. Amber, I think you've got some questions that were pre-submitted beforehand. If you want to unmute and share with me those questions, I'll be glad to answer a few of those. Or if anybody else has questions, be glad to take some of those questions. So Amber, if you want to unmute and
Yeah. As I was getting ready for this today, I thought of and then listening to what you had for tips, you talked about reviewing what you have. Is there a certain cadence that you maybe recommend? I was like, taxes are never a fun time of year. Is that a good time to look into these things also? What is your recommended cadence, to make sure you know what you have available to you as a resource with your current insurance and if you might need to get more?
okay, excellent question. Really, two or three different times that I would do this. Number one is whenever you have your employee open enrollment and you get your benefit package. And used to in the past, and I'm going to date myself a little bit, the HR department would come out and would sit down and hold meetings. But now so many of us are scattered all across the country. We work remotely from home. They send you a link and they tell you you've got between this date and this date to do your benefits. And that's all they tell you. And so you're going through checking your box and you make sure that you get your health insurance and all that. Look at your life insurance in there. Click a little deeper. At that point, I want you to do two things. I want you to find out how much your company provided life insurance is. Usually it's a flat amount for everybody. You want to find out, does this change as I get older? Meaning, does it reduce? And do I have options to purchase additional life insurance, not only for me as an employee, but do I have options to purchase it for my children or my spouse as well? Oftentimes it's either age based or it's just a flat $10 a month and it covers $5,000 for all the kids you have in your house. That's the best way to look at your employee. And then always check your beneficiaries. If you have a life insurance policy through a financial advisor, through an insurance company like State Farm, Allstate, something like that, my recommendation is one of two things. First of the year, sit down with your agent and review everything that you have, or wait until you get a statement from your insurance company on your policy anniversary. Your policy anniversary will show you what's in your policy, what type of policy it is, whether it's a term or a whole life or a universal life policy. Then use that opportunity to sit with your agent and review it because that is so important. You may have taken out a policy much younger age. You may not need it anymore. It may not be, it may have been sold to you. And this is where I see with universal life policies, it may have been sold to you at a much higher interest rate estimate that now interest rates are dropping, it may not hold, and you may have to end up paying more money out of your pocket to keep the policy in force. So, the best times to review open enrollment at work and when you get your annual statement from your insurance company. Those are my two favorite times to do it. And check your beneficiaries. Now, Jess, you've got your hand up there. You want to ask a question there?
Yeah, I just you earlier in the presentation you were talking about convertibility. I think that that's another thing that's really important to ask. And in addition to whether it is convertible, how much would it cost? Because oftentimes to convert it, yes, it is convertible, but you end up paying like a really big amount after you're no longer an employee. So I think that those are just some other questions to ask, so that you understand, to your point, how you're covered while
Yeah.
you're employed, and then if you were to leave.
The best thing about that, it's a great point, Jessica, with the conversion privilege, with your work employment, employer operated or offered life insurance. Some plans have convertibility, meaning that you can take it and convert it to a permanent policy based on your age and pay those premiums. Some don't, but every policy that is convertible does not usually require you to go through any health underwriting questions. And that's a biggie. So think about it as we get older, we have more conditions that come up, maybe a cancer diagnosis, something like that. We may not be insurable any longer, but by having a term insurance policy or a policy through work that has conversion privileges, it may be worth paying that extra premium to keep that policy that you couldn't qualify for somewhere else. The other thing too, that if you have a term insurance policy outside of work that you qualified for with a younger, healthier you, you can convert that and maintain the same health rating status later on. That gives you even better rates and the ability to convert. So again, there's a lot of opportunities out there. I highly encourage you check with your HR department on your convertibility, as well as like we talked about with Amber, check and see on your conversion policy how many more years you've got. And is it better to convert it now while you're younger or wait until that term runs out as well? So super questions. So we'll open it up for just a couple more questions before we wrap up. If anybody's got one, be glad to answer that. If not, we'll wrap it up right here. Amber, you have any other questions?
Well, the only other question I thought of, and more so again because working on taxes and things like that this time of year, as your income changes, should I need to reevaluate my coverage? Um, I had my father passed away, and so there's, some inheritance there for my kids. And so is that something that a professional, my insurance agent can help me with also?
Absolutely. And so because life changes throughout there, give you an example. My wife and I, whenever my brother-in-law's wife passed away, we said, we've got three young kids running around. We need to get X number of thousands of hundred thousands of dollars just in case something happened to her, that I could have my mom or her mom quit their jobs, take care of the kids when they're young. So we did that. I'm looking at the policy just a week or so ago. I've got maybe 7 or 8 more years on that policy. Well, the kids are already out of the house. Do we need that? How do we need to reevaluate it? Do we have a mortgage? Have we taken on any new toys? An RV, a boat, that kind of stuff. It could be time to increase it. It could be time to decrease the coverage, things like that. When you do that annual review, when you get your annual statement, that's an excellent time to sit with your professional and understand that. Some plans allow you to increase the face amount without any additional underwriting. Others may require you doing that. Again, it depends on the type of policy. There's so many different versions out there, but your professional should understand that. And you mentioned taxes. The one thing about life insurance that's always intrigued me, and until the government does any differently, it's all the proceeds pass outside of taxation. If you have designated beneficiaries on there, it goes right to them tax free. You don't have to worry about that. So it doesn't build somebody's estate, so to speak, or cause any taxation as a result. So great question. So as always, again, start with your human resources department, start with your professional that sold you the policy to start with. And if you want to start somewhere just to check it out and see what's available to you, again, raa.alumniplans.com is a great place to start. There are professionals on the other end of the line that can help you out with some questions as well. So thank you for joining us today. Again, we'll have this available on the RAA website, a week to 10 days that you can go back and refer to it at your leisure. Jess, thank you for the idea, for always thinking of your alumni members, making sure that they're educated as fully as possible. Sarah, thank you very much for keeping your alumni connected all across the country as well. And Amber, as always, thank you for bringing the topic to the forefront as well. Thank you all. Take care, everyone.
Have a great night.
Thanks, John. Good night.
Thank you.
Bye, everybody.